The S&P 500 and the Nasdaq closing at record highs after the Fed left interest rates unchanged, but the central bank dialed back its forecast to just one rate cut this year. Let's bring in Jeremy Siegel. He is professor emeritus of finance at University of Pennsylvania's Wharton School of Business and the chief economist at Wisdom Tree. Jeremy, help us read the smoke signals here. We got a better than anticipated CPI number showing that inflation was not quite as hot. And yet the Fed sounded more hawkish. Was that dialed in before we got the CPI number, or how should we be looking at the totality of information we learned yesterday?
Yeah, Becky, I think you got it right. They were given the opportunity to change, as Chairman Powell said. Most of them didn't change their prediction. My feeling is if we get one more, the next CPI as a good one, you're going to have almost everyone in the two-cut camp. And by the way, I think the prospects are looking good for the June CPI. I mean, gasoline, for instance, was down from April to May 2%. Energy was a big reason why we had a low number. From May to June, gasoline is down 4%, twice that amount. Now, there's other factors, of course, but one has to realize they really don't know what the future is. If you take a historical look at how good they've been at predicting what the rate's going to be, it is not good. They are 100% data dependent. It just depends on how that inflation data and the real economic data comes in.
Even if we get one more month of good numbers, it's probably going to be September before you see a rate cut, because the June numbers wouldn't come in time before the July meeting. You've got August off. That's going to be when we could potentially hear from Powell out at Jackson Hole, maybe setting things up. So I think probably the earliest case scenario would be September. You agree?
I agree. I think he'll tee it up. Another good report. He'll tee it up at the July 31st meeting, reinforce that at Jackson Hole, and then go for it at the September meeting. And then, depending on if the data keeps on going good, we might have it again in the next meeting and the December meeting. I'm not saying even 3 is very possible. My reading is that CPI is going to come in well. In fact, he hinted on that. The rental rates are still high, plus 0.4%, even though, as Powell said, the real data is still coming in much better than that. Comes in second half of the year, you're going to have good data there.
What could get in the way? What could change the outlook? I mean, energy prices have cooperated. You've got oil below $80. If that were to change, would that take all bets off the table?
All that could. I mean, commodities going back up. Now, it looks like a lot of those commodities, copper, tin, oil, have peaked, gone down. But, there's a lot of volatility out there. And if they start going up, and we don't see any softening whatsoever in the labor market, then they would remain firm. I don't think that's my median case, but certainly it's in the range of possibilities. But I actually think that if you would take a vote even right now, as I said, most of them didn't change their vote because they had put their vote in. I think you'd get more people on 2 changes than 1 change, and all we need is one more good report, and I think we'll have it. I think the danger is if the real economy slips. Now, I know we got good payroll, household wasn't as good, unemployment up to 4%. Is Powell ready to go fast enough, or is he going to go 20, tee it up? 25 basis points, 25 basis points. Don't forget, I mean, we did inflation going up on 75. He has to be reactive. He can't be setting up things all the time. Sometimes he might have to surprise the market if things do soften.
I mean, we've seen the Nasdaq hitting a new high every day, the S&P hitting a new high every day, and I was going to say this is really a Goldilocks scenario. The economy's not collapsing, and you've got the Fed where it looks like there's a situation where they could cut rates. So the market gets everything it wants, unless the point you just brought up, something happens with the economy. What do you do with the markets right now? Where do you think they're headed?
Well, I think that momentum trade on the tech and the AI related is still there. Yeah, that has been so powerful. It takes a lot of bad news to break a momentum trade, and we just haven't gotten it. I mean, let's face it; those stocks have delivered the bacon, as they say, and as long as they do, those momentum traders are going to crowd into those stocks. So I don't see that ending anytime soon. Of course, oftentimes it gets overdone at the end, but the end is often further into the future than many people believe.